Well, folks, over the last year or so, we have done plenty of discussions with the boys from Convoy Home Loans. We've talked about DSCR loans and all kinds of things. But I think, you know what? We should step back and talk about the non-QM space, non-qualified mortgage space in general, and highlight all the other ways loans could get done. Jonathan, Dustin, how you guys doing?
Good, good. How are you?
I'm doing very well. Let's first give you a shout out to your new studio and your new sign. I approve. Nicely done.
Yes, we love it.
You're official now.
We're getting there. We're trying to be an Instagram influencer.
There you go. There you go. Well, guys, do us a favor. Educate us on what non-QM is first, like we've never heard it. And then talk about all the different ways that lending could get done, because I think most people are like, hey, I just go to the bank and get a mortgage. But there is a lot of other ways.
Yeah, so I mean, non-QM is non-qualified mortgage. We've talked about it throughout our entire channel. It's basically not conventional, right? So not your Fannie Mae, Freddie Mac 30-year fixed type loan. The great part about non-QM is we can qualify on different ways. So if you go back on our channel, you're going to see that most of our qualifications are done. Like we talk a lot about DSCR loans, debt service coverage ratio loans. But realistically speaking, there's also bank statement loans to qualify off of using only business bank statements, no tax returns, P&L, which is just profit and losses from the business with like bank statements to support it. And that's just signed and we can use that to qualify for a loan. So we've been doing a lot of those. And then there's like just using asset depletion. Like, if a client has a couple $1,000,000 sitting in their account, they don't even need to liquidate it. They don't need to sell anything. We'll just take that, divide it over 60 months, and then, kind of use that as income as well. So there's a lot of other ways to qualify for a loan.
Yeah. So and this is basically for real estate investors, right? Or not, let me actually step back. Is this for owner, OC, and investors?
Yeah, it can be owner occ or investors. It just gives, everybody that doesn't fit the typical kind of cookie cutter box that Fannie and Freddie or the FHFA makes you fit can still qualify because they've got different ways to show income, whether like, John said, it's looking at somebody's bank statements, looking at somebody's, P&L, or looking at, their stock account or brokerage account, something that shows assets in their name.
So let's just paint a picture for folks. I don't think a lot of people realize Fannie and Freddie. Basically, my understanding, they set up this, I don't know, this box that mortgage providers or mortgage brokers kind of fill out. And then they hit this little button called approve eligible. It goes in and does its fancy calculation in math. And sometimes it says yes, and sometimes it says no. There are some borrowers that you guys know immediately will never get approve eligible for whatever reason, right? Maybe they're a small business and they depreciate everything. So their tax returns look like junk, but you can watch the cash flow statement and realize there's real value there. Maybe it's, somebody who had a liquidity event and has a bunch of cash in the bank, but doesn't have a job, right? You're basically saying, let's go be a make sense lender versus, some system approve eligible. Is that fair?
Absolutely. And I mean, there's a little bit of a apprehension from a lot of clients on like, hey, should I buy my investment property or primary using bank statement loans? Like, can you guys close just as quickly as a conventional? Those are questions we get all the time just because they're always worried about the time aspect, right? If I go bank statement loan, is it going to take you guys 45 days to close, or can you close like a conventional loan in like 21 days? And, we're here to tell you, like, we do those loans closing within 21 days all the time. Just like a conventional loan, because our bank statement calculations, like if we have everything ready to go, which, speak with Dustin or myself and you'll know we'll set you up for success, but we can do bank statement calculations on income within 24 hours, so we have it down to a T in terms of this is what we need to do. This is what we need to get in order for the loan to work. We can make all the correct introductions to whoever needs to be introduced to make the loan kind of formed into a package that is best sent to the underwriter cleanly so that it can get a quick approval. We can get all the conditions in and we can close in such a short period of time, so that a lot of times conventional is not really going to be the best route, especially for self-employed borrowers like myself, Dustin, or even you, right? Where it's like, hey, we want to take our write-offs. I'd almost rather take the write-offs, not pay taxes as much as I need to, right? And at the same time, still qualify for a loan that might be slightly higher in rate, depending on whether it's primary or investment. But for investment these days, they're all pretty much the same. It's not even that much different.
I got to second that. So there's a couple of things. Over the last 5 years, I've done let me just make sure this is right. I've done probably 30% commercial loans, 40% non-QM, 30% conventional. And conventional takes the longest. The approve eligible, and maybe it's because I have a lot of assets and this freaking endless documentation and leases and all this other garbage. But a conventional loan for me is 60 days, best case. A commercial loan, the appraisals are longer, all of those are about 45 days. Every non-QM loan I've gotten over the last 5 years has been less than 21 days. So if speed is your thing, non-QM, at least my experience, has been much, much faster. Now, let's talk about rates, because there was a time, again, my experience, where there was about a point delta between prevailing non-QM rates and what you could get conventional. Dude, I've seen that vanish in the last 6 to 9 months. Is that just me, or is that true?
No, I mean it's always a little bit of a ping pong game, back and forth in terms of how big that delta is, right? And as of today, I would say the spread on investment property financing, right, between
Yep.
just say non-QM, it could be bank statement, DSCR, P&L, asset depletion, okay, is maybe an eighth or a quarter point. And in some cases, if the DSCR cash flow is really strong, or the assets are maybe twice what is needed to qualify for the monthly payment, is sometimes lower than going conventional financing.
I've seen it.
Yeah, sure, on average it might be higher. Now, where we're seeing the biggest delta is owner occupied, conventional, full doc, somebody using only W-2 to qualify. And you compare that to like a bank statement product right now, I'd say we're at like 0.5% higher going bank statement, owner op instead of W-2.
Yeah, totally get it. That makes total sense. Well, if somebody wanted to go ahead, sorry.
So I was just saying that's what Fannie and Freddie and the government, they want to.
Yeah, of course they do.
The owner occupied, borrowers. That's what they're trying to service, not the non-owner occupied finance.
No, they've made it very clear that investors are bad and they're layering on fees and rates and all of that. That's why non-QM is, in my experience, faster and, heaven forbid, can be cheaper in the right situation. If somebody wanted to reach out to Convoy Home Loans and have them tell you their situation, see what is right for them, how should they do that?
Go to convoyhomeloans.com and let us know you came from ORAT.
Folks, you got to tell them you came from ORAT. If you do that, you get one of these two guys. If you don't, you get somebody else. You don't want somebody else. You want one of these two guys. Thank you.